Welcome to The Explainer. This is where we break down really complex topics to give you that strategic edge.
All right, let's kick things off with a pretty big idea. In any complex system, you know the official rules? They're really only half the story. Just following the instructions, that's not enough to win. The real advantage, the real secret sauce, is figuring out the hidden logic, the why behind the rules.
So what if you knew that hidden logic? The one that's driving billion-dollar tax decisions and, life-changing immigration outcomes. Well, today, that's exactly what we're doing. We are going deep to uncover the unwritten rules that really run the show in the U.S. tax and immigration systems. This is what separates just doing it right from playing the game like a pro. Okay, so Section 1, Decoding the System's Rules. First things first, we've got to decode the system itself. Because these aren't just rule books sitting on a shelf collecting dust. No, they are living, breathing frameworks with their own incentives and constantly changing standards. If you want to win, you've got to understand how the game is played. All right, Section 2 is all about the tax code's hidden incentives. Let's start with the tax code. Experts will tell you it's designed to do way more than just collect your money. It's actually a super powerful tool the government uses to get people to do certain things. And this right here really gets to the heart of it. The government actually uses tax breaks to encourage specific activities. Think about it. When people invest in real estate, what does that do? It helps create housing, right? It's kind of like a partnership. The government wants more housing, so they incentivize you, the investor, to provide it. And in return, you get some of the best tax breaks available. It's a win-win. And that partnership leads us to this really powerful idea called a paper loss. Now, this is the secret weapon for legally wiping out tax bills. It's a loss that only exists on paper, for tax purposes. Basically, you get to deduct the value of a building as it gets older over time, even if, in the real world, that same building is actually going up in value. Pretty neat, right? So you're probably wondering, how do I actually do this? Well, experts lay out a super clear 4-step strategy. Step 1, you invest in a short-term rental property. Step 2, you get something called a cost segregation study. This just separates out all the different parts of the property. Then, step 3, you use that study to speed up the depreciation on all the non-structural bits. And finally, step 4, you take that huge paper loss and deduct it from your other income like your W-2 salary. Boom. And the impact? Oh, it's huge. We're talking about $120,000. On a pretty typical property, that cost segregation study can cook up a first-year depreciation deduction of $120,000. That is a massive number to play with. And here's the magic. That deduction, it's often enough to completely wipe out, say, a $100,000 salary. It legally brings your tax bill all the way down to zero. That paper loss directly cancels out the real money you're making. Okay, let's switch gears a bit. Section 3, the business structure advantage. Because how you set up your business isn't just some boring legal thing. Oh no, it is a huge strategic financial tool. And right at the center of this strategy is something called a pass-through entity. Think of an LLC or an S-Corp. What this means is the business itself doesn't get hit with income tax. Instead, all the profits just pass right through to you, the owner, and then you just pay personal income tax. Super simple, and it avoids that double taxation problem. Now, here's a really key piece of advice you'll hear from experts. They say you should probably start as an LLC. It's simple, it's cheaper. But then, once your profits hit a certain point, you need to think about becoming an S-Corp to handle self-employment taxes. It's not about which one is better forever, it's about what's better for you right now. And this really breaks down that strategic choice. An LLC? Yeah, lower startup costs, way less paperwork, so it's perfect when you're just starting out. The S-Corp, while it has higher admin costs, we're talking maybe $2,500 a year, it can save you a ton on that nasty 15.3% self-employment tax once your profits get over, say, $50,000. So you're trading a little simplicity for potentially big tax savings as you grow. All right, Section 4, Immigration's Shifting Standards.
Now, this whole idea of hidden rules and changing games, it's not just about money and taxes. It is a massive deal in the immigration system, too. The standards for getting approved are not set in stone. They are constantly changing, and you absolutely have to know which way the wind is blowing. So, let's take a look at the standard for good moral character for citizenship. In the past, it was all about the negatives. Did you have a criminal record? Did you pay your taxes? It was about proving you didn't do bad stuff. But now, the focus has completely flipped. It's now about the presence of positive factors. What that means is that officers are now told to look at the whole picture. They're actively looking for positive things. Are you involved in your community? Do you have family you take care of? Are you working a steady job? The unwritten rule changed from "don't be bad" to "proactively show us you're good." That completely changes how you need to build your case. And it's not just that. The rules for the Extraordinary Ability Visa, the EB-1A, are also in flux. The official process used to be that even if you checked all the boxes, an officer could still deny you based on their own subjective feeling in a final merits determination. But a recent court ruling basically said, nope, you can't do that. That subjective final step violates procedure, and that gives applicants a brand new way to fight back against a denial. And here's another huge shift, the medical review. It used to be all about public health. Do you have a contagious disease that could be a threat? But the new focus is much more about the public's wallet. They're now concerned with chronic conditions like diabetes or obesity, wondering if you might become a financial burden on the U.S. system. Okay, Section 5, Gaining the Strategic Edge. So, after all that, what does this actually mean for you? How do you take all this and turn it into an actual advantage? Let's boil it all down. So here are your strategic takeaways. 1. The tax code is designed to reward you for doing certain things. 2. How you structure your business is a massive financial decision. 3. Immigration standards are always moving, they're not fixed. And maybe the biggest one of all, real success comes from understanding the why behind all these rules, not just the what. Because at the end of the day, success in these complicated systems isn't just about compliance. It's about strategic application. Look, anyone can follow the rules. That's passive. Strategy is active. It's about understanding the whole game board and using the system's own logic to find the smartest path forward. Which kind of leaves us with one final question to think about. What other unwritten rules are out there, governing the systems you have to deal with every single day? Because remember, mastering the official rules, that's just the price of admission. The real challenge is seeing the game behind the game.